Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, subscribe to the channel. I go over a lot of commodity type companies because that's where the value's at. So I'm finding value in the most undervalued sectors the world has. And if that interests you, I would subscribe to the channel and become part of this community as we talk a lot about commodities. And I'm going to go over some questions. The questions are great questions, and I may not have the best answers because some of them are very hypothetical in nature. You can't really, there's nothing to really go back in history, but I can give you my opinion. Now, some of the comments, there's a lot of comments here. It says DNN, backed by the Lundin Group, is by far the best compounder based on price and value going forward. Along with the cheapest uranium price at a base level, it's a game of margins, and they've got it. So I'm going to disagree that it's going to be the best. The best compounder is going to be a high-cost producer that is on lots of debt that has been sold off to the depths of HELL, and they nobody wants them. And then all of a sudden the price goes up and their debt doesn't matter anymore. And all of those opinions of that company are now changed and everybody wants to pile in it. So usually what happens is everybody buys the companies that have the lowest cost producers, and they go up the least during a bull market. The high cost, high debt companies go up the most when the price goes up. That is how commodity bull markets work. That's how it's worked in the past. The way that you can make a lot of money is to get a company that is very early in its discovery phase or early in its developer phase, and those can appreciate very well too. I think DNN will do, Denison Mines will do absolutely well. I don't think it will be the best returning company. I don't think UU is not going to be the best. URG is not going to be the best. I don't think any of these companies are it's going to be a company like Bannerman well, that has a big market cap. It'll be an exploration company. I don't know which one. Something like a Canalaska, PurePoint, ALX, Fission 3.0, one of these like 10 million market cap companies, base load, 10 or 20 million market cap right now, that's going to go to 200-300 million, maybe even a couple billion. A company that's already very large, like a Camco, you just don't have, the math is working against you. You're too big. You can't go from a couple $1 billion to 500-600 billion. I mean, maybe you could, but the smaller guys, they're going to do more if they find something. Maybe ISO Energy or something, from the bottom. So here, this is a difficult question to answer. It says, on a different subject, what do you think would happen to the price of gold if the U.S. were to oust the Fed and return to a gold standard? And if this were to occur, how would a higher gold price affect platinum, silver? Which metal would perform the best and be the best investment today? I think gold would be the best performer in that type of scenario. If we have a reset, and I don't think we will, but if we're going to have to reset like you're explaining, the banks hold the gold, and the gold's going to get revalued. I think silver and platinum will get revalued upward. I just think gold will go up the most in that type of scenario. The reason I like platinum and silver at the moment isn't because of a reset. It's because of the supply demand of industrial users piling into platinum and silver. If you were to look at rhodium and palladium, the industrial portion is what drove those metals higher, and those metals are already going higher. They're going way higher. So if they're going way higher, platinum is the laggard. That is the substitute at the moment. That's why I like platinum so much, because the industrial supply-demand balances are going to force that higher with the inflation component that's tied in there. That is tied into the price of all these things. So that's why I like platinum and silver so much, is because it has the industrial component, and everybody wants to use those two metals. So I think gold's going to be the best investment for the scenario that you described. It went up more than silver and platinum in Weimar, Germany, I think. I think in other areas as well, gold's gone up more in a hyperinflation scenario. I don't know any. It's just basically know the sources that has the spot price of vanadium. I don't know where to look that one up. I don't know as much about vanadium. This person's going to put their entire stimulus check in uranium. That's up to you. I can't tell you what to do. Uranium is a very good sector, though. So that's a couple of the questions that we've got. I'll look for something else here. How about the comparison between the previous bull market and the upcoming bull market? I've already done a lot of that in my previous videos. I've got asymmetric bets. I've got which sector, how they performed last bull market. I compared them to this bull market, and then I put price projections based off of old ones. You could also say that some of these bull markets are a first wave, and an Elliott wave. You're going to get larger bull markets going forward as they're dumping more and more money into the system. You're going to have higher and higher inflation because we've been in a disinflationary environment for 40 years, and now we're going into an inflationary environment where I think that this potential bull market coming up is going to be much larger than the one in the mid-2000s, because the mid-2000s didn't have as much demographic support. This one does with the millennials coming through. So with all that demographic support, we're going to get inflation, interest rates are going to go up, and we're going to see a large rotation of money out of certain sectors into our sectors. That's my opinion. That's what I think history's kind of bared out when demographics get a little bit larger, like the 1970s. And that's what drives housing starts, inflation, is the demographics. That's my opinion and what I've seen in history. Bought CDEV yesterday. Good job. That's at the bottom of a cup and handle pattern. So what I've done in my personal portfolio to share with everybody is I loaded up on Centennial Development at $4.04 is where my buy point was, because I just bought it a couple days ago. I also bought an option on it. I don't recommend doing options, but you know what? The chart pattern is so big. I got an option that's out there a ways, and it was up, I don't know, maybe 30 or 40% yesterday. But I'm holding on. I think Centennial Development has a very good chart pattern. I think oil is going to go higher this summer. I think oil's at a very cheap ratio. Everything's aligning, so that's where I'm putting money in the oil companies. I also bought more in Callon Petroleum. I would put it in SM Energy, but that position is so large that I'm not going to add anything to it. I'm going to add a little bit more to these other companies. Contango Oil and Gas would be a good one to add to, but I added personally to Centennial Development and Callon Petroleum. I've also added personally to some silver companies. I've added to Metallic Minerals. I've added to Freegold Ventures. I added to Aftermath Silver, a couple silver companies. I added to, there was one other one, Discovery Silver. So I've added to those, and I'm going to continue to add to those if they come under pressure. I would add to Teuton Resources. I think that one's going to explode higher. So I've been putting bigger positions there. I've been looking at Nova Royalty. I don't know if it's going to go down any further than where it's at. So I may put a little bit more money into that as well, just to let that thing ride and do well. So those are the ones that I've added into. You know exactly what I've done. I've been adding into them literally this past week. So you know exactly where I'm adding. Now this isn't financial advice. I can't give advice. That's just what I'm doing. And I know you guys care about what I think, but of any of these companies, my biggest ones that I've been putting into have been Centennial Development and Callon Petroleum. I think oil is going to have a gigantic move. Uranium, I think we could still see a pullback in it, and that's why I haven't been accumulating in the past week as much as those other ones. So that's where I'm at. I think Centennial Development has a very good. That's the one I really like. If you guys like this content, give me a thumbs up. Appreciate you guys listening. This is Finding Value.